Hello there, everyone, and welcome. This is Pearls of Fisdom, and I'm Avan Dabash. Well, today we put the spotlight on something that's glittering, glimmering, and in the spotlight already. I'm talking about Senco Gold. It's a pan India jewelry retailer with the highest penetration in East India. It mainly retails in gold jewelry as well as diamonds, silver, platinum, and more. They've got a focus on lightweight jewelry and have got an extensive retail network aiming to cater to a wider network and customer base. So let's understand the long term prospects and whether the road ahead is glittering or not. Joining in is Mr. Suvankar Sen. He's the managing director and the CEO of Senco Gold Limited. Thank you so much for taking time out and joining in. So I
Thank
just want to
you.
understand how exactly it's working right now because there is a lot of focus on lightweight jewelry. It ranges from a small transaction value of 2,000 and then it can go up to very high transaction values as well. Can you just give us a sense as to what it's averaged to in terms of your transaction value for the year and how do you see that growing?
What we have seen this time, if you look at the last financial year, our average transaction value has gone up from say 65,000 odd in the previous year to about 72,000 rupees per transaction value. So, which means about a 10% increase in terms of what the customer is willing to pay. Now, that is a factor of multiple things. Now, the thing is that the jewelry industry itself is I would say in a very state of volatility. How I would explain to you, if you look at our quarter four, numbers that we have declared, publicly, you will see that Q4 to Q4 of the previous year there has been substantial growth. If you overall look at the yearly numbers as well, that also has grown from the previous year almost double digits, close to 20% and more. The diamond jewelry as a category has done very well in terms of almost 30%, close to 30% growth. So the last year, the financial year has been, I would say, quite a great year for the jewelry retail industry. But then again, if you ask me that, Shavankar, how is the situation looking like right now, especially so because from the mid of March till
Mm,
say as we speak, there has been a rapid increase in the gold price. It's a
yeah.
jump from say 63,000 rupees to close to 74,000 rupees, which is 15% or so increase in a matter of a month or so. So that's a kind of, these kind of volatility. It confuses the consumers. It confuses the planning that you are, moving with a particular plan. And suddenly such movements impacts footfalls, and consumers wait for the prices to stabilize. In the long run, maybe nothing changes. People, their faith on the product, on the category, they know that whenever there's a crisis in the earth, then gold is one such category that shall shine, outshine everything. So that's a good way of looking at it. But in the short term, you would be facing challenges. The footfalls are down. I just said also in one of the interviews that yes, we are seeing volumes dipping by 20% compared to
Okay.
last year, only because the prices have moved up by 15% or so. So consumers, they don't, the budget of the consumer. Now, last year, you see the ATV going up. Now, look at this. How does it work? It's because what? The budget of the consumer has grown. There has been an increase of their old gold exchange. So consumers have come, exchanged their old gold and bought new jewelry, which is hallmarked HOID. So these are the good parts. So consumers are being able to cope up with the gradual increase. But the moment a sudden increase happens, consumers takes a little time and then they get
Yeah.
used to it. Then it happens.
Yeah, you stole the question out of my mouth because I was going to talk about these soaring gold prices. You can't go unrecognized. And yes, that safe haven demand or that concept of investing in gold still is very prevalent in India. So you did say that that impacted your volumes to a certain extent, but give us a sense if you could just break it up for us because I started off by saying that there's gold jewelry, diamonds, silver, platinum. How does it work in terms of your revenue contribution from each of these lightweight jewelry?
So, see, if you look at the breakup of the revenue, 85% of our sales is plain gold jewelry, which is like 22 carat mostly, a little bit of 18 carat for the Western designs. Around 11 to 12% is your diamond studded jewelry. So that's been also growing. year on year, we've been growing at 25-30% plus. So this is what we see, that with the increase in gold price year on year, the consumer, for certain kind of design, occasions, I would say, which is, say, everyday wear, daily wear, or parties that they need to attend, because with the changing lifestyle, the changing fashion, diamond jewelry goes well with it. So that has seen a steady growth, and it's currently at the 11 to 12% stud ratio. Platinum jewelry is about 2.5 to 3%. Now that, again, platinum as a metal. Now look at it. Platinum is supposedly rarer than gold, lesser in
Hmm.
quantity, more premium. It's just that it looks like silver, and it's white metal. It's not yellow metal, but still, in terms of rarity, it is higher than gold. But price wise, currently, if you look at it, platinum is at 4,000 rupees at the retail level, and gold is at 6.5, 7,000 rupees. So it's a great buy if you look at it in that way.
Yeah, sure.
Young women, with the kind of, if you look at it, everything has a color sense. So if you're wearing
Hmm.
white and black and blue, the kind of shirt that you're wearing, right, it will go well with platinum and diamond. So
Yeah,
it's all
sure.
how you want to dress yourself up. So that's there. And then we have silver and fashion jewelry. That itself, we've got a brand called Gossip,
Okay.
which is doing about 2%. So those are
Okay.
your gift and low ticket size, and
Sure.
silver and junk jewelry. So that's how the breakup is. And in terms
Right.
of heavyweight and lightweight, now let me tell you, which is was that's something interesting. Our I would say 70 to 80% of the products we sell is below 50,000 bucks. Now imagine, that's the kind of
Oh,
thing. About 10-12% is the products we sell which is below 1 lakh, and
okay.
50,000 to 1 lakh, and it's only 5-6%, whatever is left out, is where the products are higher.
Okay.
So
Yeah.
wedding jewelry, which is a category of itself. So where what happens with wedding is that it's only the necklace and the bangle which is of a high value, and that, I'm sure that with the time,
Yeah.
now that the prices have
Sure.
moved up, now you see,
Yeah.
if you do back calculation, gold is 7,000, 8,000
Hmm.
rupees, including making
Right.
charges. So if you divide
Sure.
that with 1 lakh, then it comes to
Yeah.
hardly 15 grams
You
of
know,
gold,
you know,
right?
I wanted to try and squeeze in as many questions as we can because we have limited time with you. And you are dominated, of course, as your presence in the East, your largest store presence. Break it up for us in terms of your store expansion, your penetration to tier 2 and 3 cities, your online channel, how that's performing, and your exports to Dubai, Malaysia, and Singapore.
Correct. So see, out of 150 plus stores that we have currently, it is around 160. Almost, I would say, 75 to 80% of the stores are in the eastern part of the country, and around 15% of the stores are in the northern part of the country, and the 5-6% of the stores are in the south and west. So our core focus of expansion will be east and north,
Okay.
because we believe that our brand, which is an 80-year-old brand, which is been originating out of east, there is a goodwill, there's a trust. We call ourselves the second most trusted brand in the country by a research agency, TRA. And yeah, so there is so it's all about return on capital, return on investment. Where you're already strong, you should try to reinvest there and take the maximum out of it. And that, therefore, using the
Yeah.
brand, we have this model of franchisee. So out of the 160 odd stores that we have about 65 odd franchisee, and the remaining are company owned, company operated store. Now these franchisees are mostly in the tier 2, 3, 4, 5. So it's
Sure.
semi-urban, smaller towns, semi-rural, like rural kind of a market that they are catering to, and that is where the
Right.
strength of Senco lies. And like I would say, like a DMart, it's deep penetration. You
Okay.
go deeper and deeper,
Would
reach
that
to your
be your
customer.
differentiating factor then? What makes you stand out? Because there is competition. Let's not deny there are a number of players.
Correct.
Maybe, of course, you have that strong hold in the east, but there are other players as well. Then, so is that your USP or what
Yes,
makes you
yes. I
stand
would say that if you
out?
call our USP, there would be 2 to 3 USPs, right? One
Hmm.
is that we believe that our ability to make jewelry, which is, looking heavy but weighing light. So lightweight jewelry can be defined as sleek jewelry, which is within
Hmm.
a budget, and lightweight, which is a modern design. And the other lightweight is what caters to the upper middle class, especially for their weddings and social occasions, where the jewelry is made in a manner that it looks heavy, but actually it is light and within budget. And since we our head office is in Calcutta, and you know that the karigars, the craftsmen, the artisans are mostly from the villages in and around Calcutta, all over
Yeah.
the country. So that gives another strength that we work closely with them and we develop the designs and the craftsmanship such it's light. So that is one part of it. The second part is the business model, the franchisee model in the country. We've been the second, I would say, company. We started our franchisee model in the year 2000. So while the other jewelry players have also started it, and obviously we all learn from each other, but we've
Yeah.
been quite old in the model
Yeah.
and we've been doing it, and it has allowed us. So within
Yeah.
the capacity that we have, we could penetrate and do
Okay.
it, to do
So
the
what's the
business.
outlook
Yes.
then when it comes to same store sales growth with hallmarking become mandatory? Any incremental impact on same store sales growth due to the old jewelry exchange?
Yes, yes, there has been a great number. So last financial year, our same store sales growth on an average has been upwards of 15%. So that's a very good number. But then also, the old gold exchange program has been one of the major factors that has helped us to grow from a SS triple SG same store sales growth at these kind of levels. Usually, people don't expect such double digits for same store sales growth, but we've been able to do that. And I think that with the increase in gold price and the hallmarking and HUD coming in force, consumers are also wanting to come and exchange it in the brand. So we
Okay.
made a 0% kind of a deduction even for non Senco products, and we've got a growth of almost from a 22% old gold exchange. We took it to about 30%, and almost 75 to 80% of the old gold coming to us is a non-Senco product. So you can understand these are what's happening in the market.
Yeah. And what about ad spends? That's just about 1 to 2% of the overall sales. Are you looking at, tactical activities to promote your sales? How much, any offers or any plans lined up?
Yes, yes. We have about 1.7, 1.8% of your sales is what we spend on branding and marketing. And
Okay.
you have tactical offers going throughout the year because the consumers are always looking for something attractive. So either it's an Akshay Titya or a Dhanteras, which are the two key seasons. You have also the Valentine's Day and the Mother's Day and the Father's Day and all these kind of modern days to celebrate. So that's been a big part of the tacticals. And in terms of branding, we've had like the likes of Kiara Advani and Vidya Balan as the national face from a women perspective, because we believe in women empowerment. Powerful women who's done well for themselves. That's the reflection of what our customers are. And we also have like a Saurav Ganguly, which is like a face from eastern part of the country to represent where we come from, basically branding for our men's collection, which we call Aham. So there is a lot of spends, there's a lot of plans for branding and penetrating into the markets.
Okay. And what about like launching more collections that'll be focused on high-end designs? Are you noticing that trend of premiumization? I know you spoke about majority of your ticket sizes being at the lower end of the spectrum, but is that changing?
So see, the very important thing that we need to look at is premiumization is not only about the ticket size. Premiumization is also about the experience. So while we are seeing that yes, there has been a growth in the economy and there are many more consumers with a higher disposable income who can also spend money upwards of 2 lakhs, 3 lakhs, 4 lakhs. And we have seen a trend that yes, a lot of consumers today, it's gone are those days when this digital money and credit card sales and checks, people are much more comfortable to use these kind of modern methods of paying. It is not so much now the industry is only dealing in cash. So that has been a very drastic change and modernization in terms of payments that has happened. But we've
Yeah.
also launched products, like we've launched a brand called Cines, which is basically going to focus on lab grown diamonds and leather accessories. And there we are having stores. We've started off with 3 4 stores as a pilot project and in certain malls in Calcutta and one or two places in Chandigarh and Delhi. So there we are trying to give a more luxurious design oriented experience. So gradually, if we are
Yeah.
standing for handcrafted jewelry, It is a
Yeah.
luxury. It will become a rarity. Karigars will become rare. So we are trying to make sure that the consumer also get a great experience at the store.
And are customers receptive to lab grown diamonds? How's that doing for you as a category? Because there's so much debate. Yes, if people say it's like having a child via surrogacy, it's exactly the same thing. But then there's a lot of apprehension towards people saying we don't want artificial diamonds. How is it doing for you? How
No,
is
it's all
diamonds
about,
also as a category
no,
doing?
it's the occasion that's important. It's not really the product, because say for your wedding, it doesn't make sense to buy lab grown, because the wedding is a
But then in
pure
the US, we're
occasion.
seeing bridal, that's the dominant sales number for lab grown diamonds.
Correct. But then I don't
Not
know. I just hope that our consumers continue to be wise as they have always been, because emotions matter. In the US, people are get married 2 3 times. I don't want to sound very critical of their social behavior, but therefore
Oh,
their whole platform on which relationships are is not so deep. Therefore, for them it's okay. But now they are also changing. They've realized
so
that
you're
no, this
saying
is
if it's
not
a
really enough.
smaller occasion, it's okay to do lab grown diamonds, but otherwise invest in real?
Yes, invest in real for special occasions, make it memorable. Buy your natural. It's an asset at the end of the day, right? It will appreciate over a period of time. But for your small destination wedding, oh, okay, a small little thing that is happening, or an anniversary, or some kind of a gifting, then within your budget you can fulfill your desire of owning a big size diamond. It's all diamond. It's the way it's been made. So that's how one has to look at it.
Okay, fair enough. And what about the outlook then in terms of revenue per store? How is that growing? And are you fully break even and covering all the interest costs, etc., on each store?
Correct. So almost, I would say 90% of our stores, which are performing, is break even at the EBITDA level. We've seen that in the eastern part of the country, if you open any store, it breaks even within a year or a year and a half. Outside East India, it depends. It ranges between 1.5 years to 2.5, 3 years. But I would say 90% are break even. The interest costs are well taken care of. Yes, these gold price volatility at times it creates certain challenges, because see, we believe in hedging as much as possible. But when you're hedging, how are you hedging? You're hedging either by taking a sell position on the exchange, or you take a metal gold loan from a bullion bank. Now when the prices suddenly moves up, you're supposed to pay the margins. So when you're paying the margins to for hedging, then there are certain short term liquidity crunch which doesn't allow you to maybe fulfill the inventory as much as you would like to, but the sales also go down parallelly, so it kind of makes up for it. So this is how the balance is happening.
Okay. And long-term growth in terms of our financials, estimates are that there could be a 20 to 25% revenue CAGR, strong store expansion, gross margins as well could look strong. What are you penciling in?
So see, we have our annual numbers and the audit
Yes.
to the it's just happening in May, so I wouldn't go much deep into it. But what I have been speaking in the past various sessions, that our endeavor is to grow, say at around 18-20%. We've been doing it for the past 3-4 years, so we would want to continue with that same level of growth. That is number one. Number two
Okay.
is that in terms of our store expansion, I have again, previously said that yes, we would like to have about 8-10 own stores and 8-10 franchisees. So around 15 to 20 stores, depending on the market situation. Now, these gold price volatility, unless a stability happens, your store numbers could change by 4-5. But the intention and the focus is to open around 15 to 20 stores in the coming year. And in
Yeah.
terms of gross margin, now gross margin grows when our stud ratio can grow. So we are at 11 to 12%. Our focus again is to take it towards 15% over the coming 2 to 3 years. And I'm sure that with this gold price increase, diamond sales will go up. So hopefully that will have its impact. But again, margins, there will be reinvestment in branding, there will be expansions, new stores. Those costs, we are about 2,200 employees working directly with us. So don't, we'll have to keep on building our team more and more, make them more efficient. So those costs will remain. So margins will remain in the same kind of a range.
Okay. And before we wrap it up, just one word of advice. Any pearls of wisdom that you can share with us in terms of running a business and your journey, how it's been? A quick word.
Correct. So, see, the pearl of wisdom is, I can say from a current scenario, okay, that
Okay.
there will be a lot of turmoil, volatility, a lot of things happening in the world. But as a businessman and an entrepreneur, your world is what you create of it. So, in your mind, you have to keep focusing on what you want. Is whether it be building your brand, growing your business, doing the fundamentals right. So you could
Okay.
have a lot of distractions. Oh, this is happening here, that is happening here. Fine, that will continue to happen. You don't have control over things that is not in your control, but you have control over the things that
Okay.
are in your control. Focus on that. Focus, that what you need to do. Maybe things can get delayed a little bit, but ultimately you should achieve and the goal and where you want to go. So that's what's most
Keep your
important.
eye on the ball. Okay. Pleasure interacting with you as always. Thank you so much for joining us on Pearls of Bliss.
Thank you, Abani. Thank you. Bye.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.